Hello, welcome to McBoss Capital channel. My name is Michael Chu. This is a market recap for the week ending November 1st, 2024. So we have election coming up in the US, and the final voting will be on Tuesday. So we can maybe see the results that evening, or maybe delay depending on how close the race is. So the market is generally probably a little bit anxious about that and just like being very cautious right now. Here we see the CDOE volatility index. So just to kind of go back a little bit, we have the August low here on I believe it was near August 5th, and then we have been kind of the volatility kind of subside from there and then bounce back up right here and then subside again and then bounce back right here and then subside again and then bounce back right here. So this week we saw a huge rise on Thursday, and that was a bad day for pretty much the indexes and a lot of stocks. So now we start coming back to the around the 22, 23 area once again, and so not sure if this is gonna create some volatility, like something big here, or whether it's going to subside again, right? So that's something to watch out for. We did have a higher low right here. So the momentum seems to be a little bit more towards the upside here. So if it does push through this 23 or even 24 area, that could be a big one, right? We could see a big rise in volatility, which usually means the market will be in a fear mode, and we could see more stocks dropping. And in general, a lot of stocks have dropped due to earnings, and it was what I can see is a lot of stocks are dropping more than going up. Based on earnings. So, but the good thing is the ones that go up, they do go up quite a bit as well. But same thing, the ones that went down, they've gone down quite a bit. So we'll look at on the stocks video. That will be the second video to come out after this. Looking at more of the growth stocks that we follow recently and what's happening right now and due to earnings. So make sure you follow that, and also please like and subscribe. This video if you enjoy it, and that will give us more traction on the channel. Thank you. All right, let's look at the Nasdaq Composite Index. So the week started out pretty good for the Nasdaq. You can see we actually make a new intraday high on maybe even Tuesday, but for sure Wednesday. So Tuesday 1875.3. Yeah, it did. It did make intraday high. Wednesday, we tried to go a little bit higher, but just don't have the power. And then it came back down by the end of the day. And then on Thursday, which is the big gap down day right here, it's a really bad day just because it gapped down and it below the 10-day, and then it also went below the pink line, the 21-day moving average, and then it just closed all the way at the bottom, and we come pretty close to this red line, which is the 50-day moving average. And then on Friday, we tried to come back up in the morning, and then again it fizzled by the end of the day, and we didn't even touch the green line, which is the 10-day moving average. So this is now officially in a downtrend, based on the short term, just a few days here. And because of how severe it is, you can see if I draw the slope right now, it looks like a 45-degree angle, and that's a pretty steep slope. So definitely not a time to be aggressive at this moment because just so many news going to come out next week, and we have no idea, what the Fed's going to do. Well, we do, like they anticipate 0.25% cut, but that's the day after the election, and again, we don't know the election result, so that might still, make a lot of investors nervous, depending on the outcome. So yeah, I would say, at this moment, because we kind of didn't close above this high, that's a red flag, right? And then the second thing is the gap down. That's the second big red flag. And then the next day, which I always like to see a rebound, at least, halfway. We didn't really make that because of the gap down. We're not even close. We're actually near the bottom. So with that being said, like, we have three red flags in a very short period of time, and I would be more cautious at this moment, despite how promising you may be, right? But of course, we didn't touch the 50-day moving average. You could consider that a plus, but at least we haven't touched it, right? But that doesn't mean we won't go there. In fact, if we look at we're gonna look at the equal weight in 1 second here. But let's just jump back to the weekly chart to see where we at, right? So we have this 7 weeks run right here, which is very phenomenal for Nasdaq. And again, we see this August low here, and then we have another one in September, like a pullback here, and then we have a little minor one right here, earlier October, and then now we are November, and we have a down week, which really negative week. As you can see on the weekly chart, it doesn't appear as bad, but clearly we can see higher volume coming in and all that stuff. So we'll see if this is just a 1 week thing, right? It could be. You never know. We did go through all the big earnings, like all the big tech earnings, like Microsoft, Apple, Google, Meta, which we will talk about near the end of this video. But so at least that's all over, and I believe 75% of S&P already reported. So a lot of big news, earning stuff is already done with, which is so far, like I said, we see a lot of stocks drop, but big, and so well as stocks that are um, also go up too, but there's way more stocks down than up. So that means the environment is not so good if you were a more diversified investor like me. But if you are like own 5 stocks or 10 stocks, then maybe it's not as big of a deal because you probably pick the ones that are in an uptrend and so forth. But in general, yeah, like it's hard to say where the market's gonna go right now, right? So let's not jump ahead and see what happened and how the reaction is to the election, as well as the next day. It's happening so close, right? Because Tuesday we have the election final day, um, and then Wednesday we have the Fed meeting, and so it's just so much things happening on Wednesday. Like people will be absorbing all this news, and I would even say that just because there's so much news, I would even wait till the end of the week to be more certain about the direction of the market, because maybe Wednesday and Thursday it will fluctuate quite a bit, and it may not actually be the real direction until Friday or even near the end of week. And I always say that a lot of IBD investors, they like to follow, like if the week closed strong, that's a good sign, and then if it closed weak, that's not a good sign, right? And we had that week right now. We just couldn't come back to the even middle ground. We closed at the bottom of the range, and this is really bad. And we have a higher volume, so we definitely have a distribution day on S&P. They did reduce to 60 to 80% allocation instead of 80 to 100%. So there's just lots of unknown right now, and again lots of risks, especially for stocks that haven't reported yet. But like I said, a lot of stocks have reported, so at least on my list, maybe that I've monitored, maybe more than half has reported. So we'll see how it goes. So on the equal weight Nasdaq 100, you actually see it's the third week down, which is again we see higher volume here, much higher volume than the previous 2 down weeks. And you can see we are already at the 50-day line, which is the red line. So let me go to the daily chart here, and you can see right here, like we actually make a new low on Thursday, and then on Friday we kind of sit just a little bit above the red line, which is 50-day. So again, 50-day is critical. A lot of people pay attention, especially institutions, and then the 200-day also very important. That's usually the long-term trend line. We don't usually cross that very often. So we are very close to it. So are we going to cross that again here? Like, so we did cross that in near August, and then we have another one near September, and now, yeah, like this wouldn't be surprised if it goes through this right here again and test it one more time before we take off, right? So and we'll talk about the economic numbers that just came out. Everything looks good. Yeah. So what I'm trying to say is I don't think we'll go into a bear market or anything. Yeah. So on the S&P, you can see the chart looks it was not bad. Like we can see right here we just have no power coming back up right here. Very tight consolidation, but we just weren't moving up, right? Like we didn't even come close to this high right here in this last many days here. We just don't we're running out of power, and then we have this gap down again on Thursday, and it dropped all the way to the red line 50-day. And then again, same thing, just like Nasdaq, it couldn't come back to the 10-day on Friday morning, and then it just started to give up throughout the rest of the day, and we closed near the bottom of the range. And now we're just sitting slightly not too far away from the 50-day. Now you can see the 200-day is quite far away, so again we never came close to it. I don't expect, unless something really bad happen, economically or even geopolitically, or maybe the election result, maybe maybe it's so close that it's uncertain who's winning. Maybe we could see another week of downturn, and then maybe we'll make a blow somewhere here, and then it'll bounce again, right? So that's the hope anyway. But short term, yeah, definitely be cautious until all this resolve itself, and then maybe we'll have a year-end rally, once we pass, the first or second week of November. Let's see how that goes here. On the weekly side, we are on the second week down. Again, here you clearly see it touches the red line, which is 50-day. So it's important for to see how it react here. But like I said, I wouldn't be surprised if it crosses again, and just shake a lot of people out short term. In the Dow Jones, you can see we are also on the second week down, but this week it looks like Dow holding up a little bit better, but it's still at the 10-day, I mean 10-week moving average. Go to the daily chart here. We are finding resistance right here on the green line, which is the 10-day moving average. You can see even on Friday. So Friday it did do pretty well. After this drop here on Thursday. I'm not sure if it's halfway. Yeah, it probably near halfway mark of the losses. So this one looks slightly better. And then it didn't give up any. It didn't drop below or close below on Friday. The red line. So which is a good sign. So this is showing a little bit of strength. Again, we're not in the clear because we are at this downtrend line right here. So it could easily start to go down again from here. So it's hard to say, right? So hopefully it doesn't go up too much, too down, too far. Like I say, it might cross it again just to shake out a lot of people, and then it might do this bounce right here. That's the hope anyway. So this is the equal weight S&P RSP, and this chart doesn't look good at all, right? You can see we are not only on the downtrend, and clearly found resistance at the 10-day, and then on Friday again same thing here. We closed near the lows, and we are slightly below the red line. So that's also not a good thing. Let's see. So here we have a low of 176.41. So we are slightly under it right now. So we did trigger this low here. Again, that would possibly, if on Monday we open gap down, like I wouldn't be surprised. Like, it would trip a lot of people who have stops around this area. Again, it'll be a huge shakeout. The market loves to shake out, the lows, right? And then, if you have a stop there, you'll be kicked out. But more importantly is how, whenever you trigger a stop or area where lots of stops are, it's not so much whether it trigger it, it's more about like how it acts after it trigger it. Does it comes back up? Does it want to come back up? That's more important. So here's Russell small cap chart, daily chart here. And again, we found resistance on Wednesday, and we closed at the low. And then Thursday, surprisingly, this didn't gap down. And then it did close at the 10 red line, which is 50-day moving average. And then on Friday, you can see it was really strong in the morning, but then it closed at the end by the end of the day, like near the low. The good thing is it didn't give up this red line so far. That's the good sign. We have been staying above it for quite a while now. We've been testing this number here, this red line quite a bit, and I don't want to jump to any conclusion, but we did talk about previous election cycles where the Russell takes off after the election, and I don't know if that's gonna happen again. If it does, it could be very strong. Just because if you look at this pattern, right? We have this really long consolidation here this whole year, first half of the year. Then we break out right here, and then we stall as soon as we make some progress. and then we came back down really hard, in the August, lows there. I still remember that time. A lot of banks were coming out, and all of a sudden they all got knocked back down. Like anyhow, and then since then we just been gyrating here. Now we sitting at the upper half of this base right here. So if I draw this base right here, we've been consolidating now closer to the top half, right? So that's a good sign because technically that means that it's setting up, right? It's setting up, and it really what this looks like is a big giant cup with a handle pattern, right? And it's just setting up like this, and then if it does break out here, and I don't know if it will, but if it does break out, this could be a really positive technical pattern. So looking at the weekly perspective, you can see this index, Russell index, has just been consolidating for so long now since 2022, and then we're starting to come up, and then now we were in this area for a while as well, right? And then now we are now in this area mostly, and so we're getting better, and the 2300 marks right there around near that area, and 2400 on the top here. So this is the only index that hasn't made new high, um, or major index that hasn't made new high. So if we do break this level, like let's say even this is 23, what is it here back here, 2360. If we do fly above that, or here the short term would be 2300. Those are possible buy points, and who knows, like small caps might actually roar. We have seen a lot of improvement in small caps. Um, uh, there's lots of stocks that have breakout and move up significantly recently based on earnings. So that's also a good sign. So that could mean that maybe there's more um, momentum for those type of stocks, the smaller cap guys. But again, we're not fully out of the wood yet, but we're getting closer and closer, and we're setting up for it. So we'll see what happens after the event. Mark Winnie, he's having his course this weekend, so some people are attending that. But anyhow, he did mention that he really wants to see the IBD 50, which is the top 50 growth stocks they follow every week, and you can check that out on their if you're a subscriber. But he was talking about this cup, and now it's building a handle right here. So he really wants to see this breaks out. And once we see this breaks out, it will be a better indication that growth stocks could actually work and have momentum. So I just want to point this out quickly here, that possibly if this set up properly, we could see some strong momentum coming up. So here's the daily chart. So it's on the weekly chart, the handle doesn't look as bad as here. So we'll see how this goes. But so far it looks okay. It's still, this is the 50-day line here. I think as long as it doesn't break below this, I think there might be potential here to do this pattern and break out. So let's see how this goes. So this is IBD newspaper right here, Investors Business Daily. So economic data looks mixed. The U.S. economy grew at 2.8% annual rate in Q3. So right here, two. So that's a pretty strong growth still. You can see Q2 we had 3, and now we're at 2.8. So really strong GDP. And there's hiring stall due to Hurricane Milton and the Boeing strike. And so the non-farm payrolls growth on Friday came out. It's a very low number due to those two events there. Market didn't, again, surprisingly, market didn't add too negatively on Friday. So that's a good thing. The ISM manufacturing fell below 50 still, so you can see it's still under the 50 level, which is more of a contraction sign. So we also have the personal income number rose 0.3% in September, which is below the 0.4% increase. Spending did beat bills, up 0.5%. The PCE inflation came out at 0.2% month on month, and 2.1% versus a year ago. So that's near the 2%. And then we have core PCE with a 0.3% rise versus previous month. And then we have 2.7% year over year, which is slightly above the 2.6% view. So that came out on Thursday. Again, I don't know what sparked the Thursday sell-off. Probably the earnings and some of these numbers. I'm not sure. But we, like I said, we had a bad day on Thursday. So this is the 10-year yield, and you can see we crossed this 200-day moving average, and it found support right here. and then here it kind of finds support again, and now we're at new high. So this like definitely looks like it's going towards this 4.5% level. That's where a lot of analysts, expect it to go to, because we now passed the 4.2, now we at 4.3 and above now, right? So this is starting to, uh, create some problems now for the long-term rates and stuff. So we can just quickly look at SHB, still in correction mode right now. Look at how steep this 10-day moving average is, and you look at the rejection right there on the 10-day moving average. So this is now starting to look more severe. And again, this is not, the chart pattern is now broken. So home builders are suffering now. Let's go back to the dollar, and you can see the UUP is pretty strong. It found support at the 10-day right here, and then it bounced on Friday. So I don't know if this will keep going because it's already very strong. This is all time like pretty high right now. Now let me see. Go to weekly chart. Yeah, so near the breakout level here. So it's getting higher and higher. Yeah, gold did pull back this week, which is not sure the exact reason, but it did kind of fall back to the bottom. Um, it was strong. It was strong up to Wednesday. You can see on the daily chart here, and then Thursday it was a gap down, just like the general index. And Friday it looks even weaker because it actually made a newer low and closed at the low. This is the oil. The oil is still kind of looking not too good. You can see this downtrend right now. It tries to come back on Friday. Maybe this might work because it did kind of cross, but at the end of the day, it's still close near the lows. So we'll have to monitor this, but maybe it did find some equilibrium point around here. It could fluctuate more around this area and then eventually go back up again. So far it's been holding the lows, and so it's making higher lows. So that's a good sign so far. Another way to look at market breadth is the New York Stock Exchange advanced decline line. And here we see on Friday, there's a little bit more stocks down, 1,200 versus 1,000 stocks up. So again, we are keep hitting new lows right here. So that's not a good sign. We've been doing really well recently until like just a couple of weeks ago, because it was kind of on an uptrend and now we are on a downtrend. So it does, so there's definitely less stocks going up now, based on this breadth here. And we look at Nasdaq, this is even worse. We are making quite a new low very soon here. You can see we might even go below August low. Yeah, we're getting really close. This is looking very ugly. So there's not many tech stocks that are doing well right now, in Nasdaq. Looking at the weekly, this week, the market from IBD, again, we did have a distribution day on S&P on Thursday. The allocation had dropped to 60 to 80%. And from an accumulation distribution standpoint, we have this many stocks being distributed and this many stocks being accumulated. So there's more, definitely a lot more on Thursday and Friday, double. You see that versus accumulation. On the group side, same thing. We have about 2-to-1 ratio here. So it's not completely all red, but it's pretty bad. Like two-thirds are not doing well. And then on the net accumulation in each sector, you can see it's all negatives, meaning there's way more accumulation than distribution. And in terms of strength, we really haven't seen much this whole week. Slightly better earlier the first 2 days, but really hasn't shown much strength. So again, very hard to swim up the they say swimming upstream because the water is just against you, and this is right now the market's on a downtrend. It's just much harder to make money in this type of moment. Going into next week, we continue to have more earnings, and some of the more pronounced area in AI related like CEG, Constellation Energy. You can see it's not doing too bad. It's trying to hold at this level right here, and it did go below the 21 days slightly on Friday. So we'll see how that goes. And then we have VST here. Very similar chart pattern. Again, same thing. Friday we can see it did drop below the 21 day. Um, again, this is very risky stuff because they have gone up quite a bit, and if they have any, if their expectation, market expectation is too high, and they don't deliver on their guidance and earnings, like that will be really bad. It could have a huge drop, right? So we gotta be very cautious about that. We also have Palantir also coming out this week, and this one has been holding up quite well. But now, again, Thursday you saw this big drop, just like following the market, and it just, that's the problem when market drop is that, if the stock follows it, it can drop even faster. And that's the scary part about growth stocks, right? In IBD, Bill O'Neill book, he talks about how growth stock can drop up to two times or even 2.5 times more than the general market index. So we gotta be very careful about that because you don't want to get hurt. If the market pull back 10%, you could drop as much as 25%, sometimes even more. So it's very, especially for a growth stock that has gone up a lot. And again, I'm not going to talk about in this video, but in my next video, we can go through, a lot of stocks that have kind of cratered and it has dropped really big last week, and they will lead us, prior to that. And then we'll also go through lots of stocks that are setting up as well or making new highs. So we're on the final portion of this video. We're going to usually recap the tax. And this is semiconductor ETFs, SMH. And we can see on, we were holding really well above the short term moving average, but, we just couldn't break out, right? Instead of, we can even see IBD market search chart here shows this handle, this cup and handle pattern, but we broke that handle, right? Because we went down right here, right? We went down. I mean, it can recover, but it just doesn't look as nice anymore. And the volume was huge that day, right? So that's also signs of, like, I mean, there could be lots of and what people trying to get out. Now, sometimes that could be the bottom, but more often than not, it's probably not in this case. I don't know. And Fridays, it kind of closed at the bottom of the range again. I usually like to see it recover more than half of that Thursday's loss, but in this case, I don't think it did. So again, that's another weakness. But yeah, with that being said, let's look at some of the semiconductors this week. Let's start with Nvidia. So here, Nvidia, was doing so well. It came back up right here, and I didn't get back in just because of the earnings. I just didn't want to risk any earnings report coming up, and so it did come back to the previous high, but right now it has fell below that. This is you know I don't want to say this is the we're going to go to a big correction for Nvidia or even the general market, but this is let me see what stage is it. Stage three. You see that right there, consolidation stage three. So the way I really they measure all their bases, right, by stage. So stage one, stage two, stage three, and sometimes in late stage, depending, like three or four, sometimes even five or six, but generally stage three or four. A lot of time, which is about 2 years now, right? The market has been in bull market for 2 years now, and Nvidia has been rising since that bottom, right? So if we go back to look at the long-term chart right here, we can see we bottom around December 22 here, some like October 22 probably, and then we have been rising, and this is the third stage base since then. Actually on the weekly chart it shows four. Very interesting. So um, so we are late. We could be near the end of this bull cycle, short term anyway. Like we'll get another bull cycle after, but we could be at the end of the bull cycle. We don't know that. And again, that really depends on, if anything big happen in the economy, which we don't really know. I keep hearing news of, real estate market starting to, show a lot of weakness, and the media is not picking up on it yet. I don't know. So I don't know how the future holds, right? No one knows, but unless you have all the data to back it up. But right now, in Bill O'Neill's book, when we're in late stage phases, a lot of them will fail on the breakout. And this is a good example. Like, we're not that far down yet. We're only 6%, but doesn't mean we couldn't crack here, right? So we gotta be more cautious, especially, because this is a bull trap, right? When you get to the previous high, breaks out, and people buy in, and then it fell back, and then falling back is not it does happen a lot, so it's not bad, not like it's actually very common. But now we want to see, does it hold near this area, right? Because if it keep deteriorating, then this is broken, and that's why I say, like, when I look at the chart, it does look a little bit broken already. It's not completely broken, because you can still argue this is a handle right here. How far of a handle down, and maybe the 50 days, the bottom here, and then bounce is possible. So, but let's just wait and see, right? There's no point in taking too much risk at this level right here until we know better. So anyhow, just want to mention that overall, it's still one of the strongest stocks in the market, and especially there's just so much AI news almost every week, right? And how fast this area is progressing. So I'm sure the growth investors out there, they really still like Nvidia, and in general the chip sector. But let's just jump to other one. Like, so I did own TSM, Taiwan Semiconductor. uh I got out pretty quickly. I got in and got out pretty quickly. It was just not acting right. This bounce right here of the short-term 10-day moving average didn't work out for me. It actually fell the next day right here. I just decided to cut my loss pretty quickly here based on my stop. And it's since trying to come back again. And you can see the slope of the 10-day right now looks like this. Again, I think I mentioned this before. If Trump wins, this might not be good for Taiwan Semiconductor, because he did mention he wants to impose tariff on Taiwan Semiconductor before. So this is just in general, not specifically this company, but in general, right? But yes, TSM is the largest one, and there will be impacted if that happens. So anyhow, this could be the reason why it's just starting to falter a little bit. Yeah, let's look at other ones like ARM. So this one, very similar to Nvidia, trying to hold that 50-day there. Let's look at AMD. So this one starting to fall apart right here, after the earnings. Again, there's just so many charts that fall apart after the earnings. So this is one example that it doesn't look crazy yet, but it's starting to look pretty bad. Like I'm drawing down the slope. It looks like that right now. That's like a 75-degree angle. So anyhow, there's lots of chip stocks that are starting to get a little bit scary on the chart. And this one looks especially scary because it broke the bottom channel. You see that? And that's probably why the gap down was so bad. Like, because whenever you break a trend line like that, everyone has to stop set around that level. Uh, so let's move on to the software side. Um, we talked about this last week. They were acting pretty well. It was really tight here, and in fact, it did go higher on this week. But again, same thing. It reversed on Thursday. Not, but this one is still at the 10-day. Look at that. It's still at the 10-day. And so it fell on this breakout. So now I just drew another trend line right here. So if it breaks out again, maybe the second time might work. I don't know. But anyhow, this is the classic cut with handle pattern here. There's the high from the left side. So we broke out and hasn't moved too much yet, but it hasn't fall apart as well. So this looks actually better than many areas. So, and the volume on the sell side is not high at all. So I mean, we have one day here and then this day here, which is both looks decent, when you think of it, because I was expecting it more higher volume than the average. So let's jump to I don't remember which one report first. Let's just go with Microsoft. So Microsoft, again, this trend line broken and it gaps down. This is a really bad chart right now. So it will take some time to recover, right? Like, they will figure out their strategy in terms of growth in AI. And but again, right now at this moment, it's look a little bit weak, quite weak actually. So we'll see how this is gonna build back up over time. Let's go to Google. So Google did jump on the earnings news, but it has give back all the gains so far. Um, well, not all of it, because it was right here was a close, so it's still up. But yeah, it gave back quite a bit. And so Friday, you can see it found some support near the 10-day. So let's see how this goes. The chart looks better now because it's starting to form the right side of this base. So it's possible that this continue to work. But yeah, this give pullback is pretty strong. Um, we'll see how this goes. But I like the rise of volume right here. Next we have Meta. Meta also underwhelmed on their guidance and earnings, and you know the volume was quite substantial here. You can see. So I'm again, Meta was doing really well. It probably was the strongest on the software side. And here's the lows here. So see my trend line I drew right here. It could come out again, and maybe the second time will work. We'll see. But right now, it looks again. I just don't like how some of these stocks tried to break out, but they fell, especially near the previous high. So this is another example of that, right? This is near the previous high, so it almost feels like this was a bull trap here. And sometimes bull traps are the worst because you holding on to that, you bought in here on this breakout on the trend line, and you think that hey, this is gonna work, and I'm just gonna hold on. And then this one time that it breaks out and you hold on, it didn't work, and it could drop really hard. So I hope that doesn't happen. But anyhow, it's just I just want to cautious about bull traps because I'm seeing lots of that right now. So Amazon was the one that did really well this week. So here's the big gap up right here. Thursday it also suffered a gap down, and then we were at the near the red line. So this one right now, all of a sudden Amazon become the best looking chart out of those guys, because we're near the highs, right? And we are very close to breaking out. And then if you do the trend line thing, we are already broken out on Friday. So I believe the numbers on the fundamental side was really good. Quickly take a quick look here. So you can see next quarter gonna grow from $1 to 146, and you can see it's pretty stable, and yeah, it'll keep growing. So here's the Apple's chart. Apple's chart is looking really nice before this Thursday and Friday drop on earnings. Now it has broken this, right? This pattern here. So who knows how much more this could correct, but yeah, volume's really high on the sell side. So it did kind of close in the middle range of Friday, so there's some support around this level here. So we'll see how this act over the next week or so, and see if we can recover a little bit. But right now, yeah. So because right now all these stocks are dropping super fast, right? Kind of reminds you of the August drop right here. So sometimes when they drop super fast, that could be it. That could be the end of this, and maybe we bounce from here, or we could see even bigger drops. That's usually how it works. Either you see bigger drops, or you might start to rebound and slowly recover. So you can see right here, it slowly recovered. So it's one of those two things that could happen. On the weekly chart, you can see it dropped below the 10-day, the 10-week moving average, which is the red line. It doesn't look that bad on the weekly chart just because it's been trading, at this level up half quite a bit on the base, so it looks less damaging. So it's possible it could come back. Here's Tesla. Tesla looks pretty good here. It did fall this week as well, just like the rest of the market. But this is like, we talk about this really steep handle here, and then we have this, earnings news that propelled them to new highs, and then this week is basically a give back week, and overall it's not bad. You can see the numbers are going to start to rise again, so that's a big sign of growth there. And then we can go to the daily chart, and we see this pullback now to the 10-day. Volume has been really low, and if you remember this breakout here, look at this volume here, really low, right? And then that gap up really pushed it higher. And so we haven't seen, it wasn't as low as here, but it's not that high here. This is still pretty low compared to, like, if you look back, right, it's still pretty low. So this is a good sign. This pullback so far, it's not too many people trying to get out, so there's not too much volume. So most likely, again, we go with this trend line again at the top here. If it pass this level right here, it can be bought again. So thank you for watching this video. Please watch out for my next video coming out. We'll go through more stocks. Thank you. Please like and subscribe.